Assalamualaikum and hello everyone. Thank you for being here today. My name is Norlaili maisarah. I'm so glad you could join me and my friend today. I'm very excited about today's topic. I'm here today to talk to you about Sharia governance policy related with risk management. So we go first with our contents. As you can see on the screen, our content today is introduction, second, risk exposure aim to address, third, how Sharia governance policy aims to manage risk, fourth, elements required by SGP ensuring risk being managed and mitigated, and last one is conclusions. For introduction is Sharia governance is crucial to the stability of the Islamic financial system. The establishment of a competent Sharia governance structure boosts public trust in the integrity, management, and commercial operation of Islamic financial organizations. It's apparent that IFIs face a broader variety of risks than their conventional counterparts. IFIs are subject to all of the risks that commercial banks confront. Furthermore, the Sharia compliant requirement place an additional duty on IFIs to ensure that all of their activity and operation agree to Sharia law and principle. This fact should be seen in light of IFIs risk exposure. IFIs are subject to all of the risks that commercial banks face, including credit risk, market risk, liquidity risk, and operational risk.
Hello, my name is Tasnim Azhar. Now I will talk about the risk exposure of Sharia governance policy document aimed to address. The first point is people. The risk of Sharia non-compliant occur when people, which is the responsible parties, and IFI management have weakness or deficiency in terms of efficiency, inadequacy of processes, or ineffective system. All weaknesses of qualified personnel or team to perform their duties in maintaining compliance with Sharia is in all activities and operation of the IFI must be managed well. Among the examples that cause humans to be involved in this problem are such as the risk of fatwa, falsification of information, fraud, violation of guideline or product and transaction, or engaging in illegal documentation. The second point of this topic is about process. The risk of Sharia non-compliant here may occur when the product is in process due to unclear processes, policy, procedure, or any workflow. In addition, it may also be due to committees that manage inadequate internal Sharia governance or inefficient disclosure and transparency. For that reason, the Sharia governance policy urged the IFI to put in place all appropriate mechanisms so that the key function could carry out their responsibilities transparently and fairly.
Hai, Assalamualaikum warahmatullahi wabarakatuh. My name is Farhatul Jannah Binti Ayop. My matric number at BB05024. Next is systems. System also can result in Sharia non-compliant risk. Inefficiency using the IT system may expose great risk to the Islamic financing institutions. For example, process and system accounting are mismatched. The accounting system must support Islamic banking procedure because for the conventional it's different how to trade the profit and everything. Other than that, inadequate products module, poor reporting, and unapproved software also can result to Sharia non-compliant risk because the software cannot cater to Islamic procedure. Another risk is inexperienced vendor. For example, in a situation where the bank appoints vendor to do something task and the vendor is not inexperienced. For example, if the bank want to come up with a document contact for Islamic banks, they must send it to the legal team that is well versed in Sharia contracts. But if they are inexperienced, then they might advise wrongly. Non-timely supports, non-user-friendly systems, System error or system mistake are also factors that expose to Islamic banking non-compliant risk. Lastly is external events. External events also can influence the bank's operation that can lead to Sharia non-compliant risk. External events such as lack of supervision by the regulations and unclear law and regulations. For example, a policy issued by BNM is unclear, or banking staff don't understand the policy and the regulations. That's all from me. Thank you.
Hi and Assalamualaikum. My name is Iffah. I will continue on how SGP aims to manage the risk. The risk management of the Sharia refers to the function of systematically identifying, monitoring and reporting Sharia non-compliance risks in the IF's operations, activities and businesses. Actually, there are many functions of risk management in Sharia, which are incorporated with Sharia incorporate risk management non-compliance considerations. Sharia risk management identify the risk exposures of Sharia non-compliance in the IFE company activities and operations. They measure the potential effect of risk exposures to IFE and to assess the Sharia non-compliance risk. Sharia risk management establishes suitable measures to mitigate the risk. Next, there are monitoring Sharia exposure to non-compliant risks and risk mitigation effectiveness. Sharia risk management report on risk exposure to the Sharia board, the Sharia committee and senior management. They challenge constructively decisions which might lead to risk of non-compliance by Sharia. Sharia risk management, which is a part of the IFE integrated risk management framework, shall be held responsible by the senior officer, primarily responsible for risk management. An IFE will ensure the necessary knowledge about the Sharia requirements applicable to Islamic financial businesses for its risk officials who carry out Sharia risk management functions. Next, I will pass to the next presenters.
Assalamualaikum warahmatullahi wabarakatuh, and hi, my name is Nurhadirah Binti Rosli, my metric number 18BB05014. Next, I will explain about on what the elements required by Sharia Governance Policy SGP and that to ensuring the risk being managed and mitigated. The element required by the SGP is under control functions. Islamic financial institutions need to ensure that the overall risk management of the Sharia non-compliant is well regulated and has adequate resources under its control. Islamic financial institutions need to ensure the effective Sharia non-compliant risk management, which require the following functions to be implemented, such as number 1, Sharia risk management, number 2, Sharia review, number 3, Sharia audit. Firstly, Sharia risk management refers to the function, the balancing or the management to manage the risk of the Sharia non-compliant, knowing the risk of the exposure to the Sharia non-compliant through the business operations, make assessment and measurements on the basis of the risk of the Sharia non-compliant, further expand in making effective measures to reduce the risk of the Sharia non-compliant, implement the reports to the board, Sharia committee and senior management on exposed to risk of the Sharia non-compliant, and lastly is provide a good constructive for decision in the face of the daunting challenge in the Sharia non-compliant. Secondly, Sharia review refers to function that ensuring greater scrutiny of the business operations in line with the standards of the Sharia by monitoring the compliant Islamic financial institution, make regular report to the Council, Sharia Committee and the senior management in addressing the problem in Sharia non-compliant, make the latest information to the Council, Sharia Committee and the senior management to provide developments on the legal and regulatory requirement of the Islamic financial institution in making decision by the publications of the Sharia Advisory Council. And the last one is provide adequate training to the officials of the Islamic financial institution in organizing business operations in complying with the Sharia requirement. Thirdly, Sharia audit refers to a function that provides audit methodology to assess the risk vulnerability of the exposure area that can be audited in order for the develop of the stronger audit. make a claim properly with the Sharia audit process, provide reference to the internal auditors in gathering information, procedure, and evaluations by documenting to make clearly. And the last one, communicate with the result to the Sharia board and committees on audit report, detailed audit, finding, and recommendation for the corrective action on the failure planned by the auditor. That's all for me. Thank you.
The conclusion that we can conclude is Sharia risk management is an important procedure for IFIS because it allows them to avoid Sharia non-compliant incidents that can result in both direct and indirect loss. The direct loss is resulting from a Sharia non-compliant risk may be due to contract breaches and violations that result in contract invalidation. Next, Sharia risk management must identify risk exposure in order to resolve the issue in advance. Finally, Sharia risk management must identify the aspects necessary by SGP to guarantee risk is managed and reduced for the benefit of present and future. That's all from us. Thank you.